Welcome to the SaaS Revolution Show. Frederik Groce, Principal at Storm Ventures. Welcome, Frederik.
Hey, Alex. Thanks for having me.
Great to have you back here. Well, actually, first time on the podcast. We had you as a sort of brief guest at SaaStock Remote, which was great that you recorded a video for us at that time. And we've got you speaking at SaaStock EMEA coming up as well. Excited for that. We do a lot with Storm Ventures as well, kind of over the years. Yeah, first time to have you on the podcast. Tell us a little bit about yourself, Frederik. A little bit about the person who is Frederik Groce.
Yeah, well, first of all, Alex, thank you so much for having me on the podcast. It's been incredible for us at the firm, partnering with you all over at SaaStock. We've just found such strong alignment with how you all sort of have positioned yourselves as, stakeholders and advisors to this next generation of SaaS businesses across the world. And we've just been tickled and incredibly privileged to be able to be part of this community and excited about investing in it further. And so look, with respect to, me, I'm an early stage focused B2B investor, been at Storm for almost 5 years, one of the principals on the team. Outside of, the work that I do at Storm, I'm also one of the co-founders of an organization called BLCK VC, which is the largest Black venture network in the United States, with aspirations to move and become, go global as well long term. But then outside of that, I'm just, an average guy in some ways. I recently got married, so I had a big life change for me. This is during COVID. So it was a Zoom wedding that got to be pivoted over. So I got to uniquely experience, that whole craziness. And then the dad of 2 dogs as well. So, we're sitting out this whole COVID remote experience with dogs that are just loving and lapping this up, getting to spend all the time with us.
I know you are. Congrats on the wedding, by the way. I did not know that, and I did not know you were the dad of 2 dogs either. And I know you're dialing in from Seattle at the moment, but
That's right.
You're in the Bay Area. Are you like, given the impact of COVID in many ways in this year, a lot of people have been sort of moving out of cities, moving out of London, moving out of New York, moving out of the Bay Area.
Yeah.
Is that something that you're like considering, or like being a VC, you feel that you have to be there because really the startup hub is still there?
Yeah. No, look, I mean, there's no doubt that there's become a transition, particularly, I'd argue actually in my peer group. So, people that are anywhere between, 3 to 15 years out of college, right, that have been working in tech now for a handful of years. We're definitely seeing a migratory transition outside of the Bay Area. I think the big question in everyone's head is, how long will this last? Is it permanent, or is it just sort of a blip as people go home to visit their families, loved ones during, what is, without a doubt, a stressful time, right? As people want to have that support system. Long term, though, I think it actually is an exciting sort of thing that we're beginning to see that I do think is going to continue to reinforce a trend we've been seeing for the last, 5-6 years here in venture, which is the explosion and the growth of, what VCs have historically thought of as tier 2 and tier 3 cities, right? Where, the cost of living in those markets are just dramatically less and lower than, than the Bay or New York or Los Angeles, and the growth and, investment in cities like Austin, Seattle, Denver, Atlanta. And I think we're just going to continue to see that. And I think COVID is sort of creating a little bit of an accelerant. But look, without a doubt, I don't think, this changes the importance and the unique role that the Bay Area generally plays within the early stage tech ecosystem. I mean, you'd be hard pressed to find an environment or community that has as much rich access to capital, has as much knowledge and talent, that knows how to build hyperscale businesses. And a community that's at the end of the day really sort of focused on giving back to one another, right? And I think, there's that giving back part that you all tap into so well with SaaStock, building that into the global ecosystem itself. But I think those unique elements will continue to allow the Bay Area to thrive and be successful moving forward. And so we as a firm, we're not setting up and saying, okay, it's time to leave and let's go elsewhere. But we are actively looking in other ecosystems. Even prior to COVID, I was spending, a week to 2 weeks a quarter traveling to other cities and trying to spend time and investing in those communities. So I think, we'll see this continue that to happen, but, I don't think the Bay Area's got too much to worry about long term.
Now, obviously, SaaStock's had to, one impact of COVID, had to pivot to virtual conferences. And one certainly benefit as a conference organizer is that they're much cheaper, cheaper and easier to run. Zoom weddings, are they much cheaper than in person? And do you think they're going to be a thing like virtual conferences?
Yeah, you know what, I do. So I think what we're going to see is a Zoom component being added to more weddings, because for us, and this is my personal experience, we had about 150 guests expected to come to our wedding, but with the Zoom sort of pivot, we ended up being able to bring in over 300 loved ones to at least experience that moment. And while we'll certainly have a wedding in person, or a sort of, a coming together of our loved ones when we can, and it's safe to do it, I do think that this has opened up a whole new world and sub-component to the wedding industry that will be interesting to see. And I think we're going to see that within the conference industry as well, right? I don't think remote, or at least a video component, is going away. And I think that's good. I mean, we want to decrease the barriers of entry for access to knowledge and information, I think. And I think for organizations that, has part of their core sort of philosophy about building that knowledge set and sharing that with communities, I mean, why not provide that as a venue for those users who can't afford to make the trip? And I think, there are sectors like sports, I think like concerts, particularly in music, that are going to continue to grow and see this as a really unique way to provide a new area to drive revenue in the door. We're seeing BTS and K-pop selling, blockbuster concerts in ways that didn't exist, 5 years ago, 2 years ago, really. And so I think it's a really exciting time for digital conferencing and tools like that.
Yeah, no, definitely. I agree. And I mean, I've been putting off my wedding for years, Frederik, because of cost, the number of guests, but perhaps there's no more excuses. So I'll have a chat about that tonight. So you split your time. Well, actually, you work at Storm Ventures. You're principal at Storm Ventures, but also co-founder of BLCK VC. So I guess my question is, how do you split your time between both? Because it's been a very busy year for you, right?
It has been, yeah. I mean, and look, for us on the BLCK VC side, I mean, things have really, gone into high gear, right? Particularly post the unfortunate and tragic death of George Floyd. We really saw this as an opportunity for us to say, hey, look, tech, and venture, we've got a lot of hard conversations we need to be having right here and now. And it's important, right? I think it's easy sometimes to get, dragged into, a state of mind where, it's easy to say, okay, this is a problem over here, right? And let's reflect and dissect that problem. And it's sometimes really difficult to sort of ask yourself, what are the unique challenges or problems that might exist in my own industry right here, or in my own home and backyard? And what I'm really sensing is this transition, right? Movement away from, realizing that you personally not being racist itself is great, but isn't enough, right? Becoming anti-racist, reflecting on the systems themselves and the structures that might prevent equal opportunity and access. And it's been, an interesting period, and so how do I split my time? I think right now, the way I look at it is, look, I've got a job to do, right? And a job that I love to do, which is, investing and finding some of the best, B2B founders out there that are looking to grow businesses and accelerate that growth. And supporting those founders we've invested in before. And that will never, change in terms of my focus area and time being spent. But like, I'm easily spending 20, 30 hours a week in my free time, my weekends, focusing on BLCK VC and making sure we're building that out and getting the support we need to ensure that we create a sea change, right? And this doesn't become a moment where we both paused, reflected, and then, 3 months later, things are exactly the same and there's no real change sort of implemented. And so, it's a constant struggle, but I think there's not a single professional that we all know or venture investor that doesn't struggle with that, right? Venture is a unique world where, those who are successful find a beautiful hybrid of merging their personal professional. And BLCK VC is, the personal and the professional sort of personified and intermixed with one another. And so, it's a privilege to do that work. And it's something, that we'll continue to work on.
Yeah, amazing. And you mentioned that it's the largest venture network in the US for BLCK VCs. Are you looking to grow that like outside of the US, or is that enough for you sort of like right now in terms of the time that you're able to kind of spend on it?
Yeah, so Alex, so like today we're live in Los Angeles, San Francisco, Chicago, and New York. We've got DC and Atlanta as two other US cities coming live over the next few months. And the question for us has always been not about will we go and continue to expand, but when, and how do we do it in a scalable and efficient and effective way, right? Because you don't want to get too big too quick where you can't sustain and support those communities you're operating in. But we're having conversations with folks in London, folks in Toronto, folks in Paris around, how do we bring and support those ecosystems? But, the recipe for us is always been the same, which is that we don't extend into a geography or an ecosystem unless stakeholders on the ground there raise their hand and say, we want this, we need this. And let's find ways to start to build this out. And in all those regions, international I've mentioned, those are the regions we've started to have that. And for us, it's just about sort of understanding what the unique challenges. One of the things that's distinctly different in a lot of European countries versus here in the United States is that we don't, race isn't talked about in the same way as we talk about it here in America. And we have a long way to go about how we talk about it here in the United States. But, there's a lot of things that make it even more challenging in Europe culturally to figure this out, whether you are even generating the data around, the race and ethnicity challenges that could exist in corporate America. And so, there are a lot of unique challenges in terms of growing that. But, the good news here is there's a desire, and the reality is the existing unconscious bias and structural impediments have created real world negative impacts to some of these, Black communities abroad. And there's desire renewed to sort of start to fix that and put in the effort.
Yeah. Well, as you said, I mean, amazing what you're doing there. And I think, whilst this year has been full of like tragedy, which has brought some of your work that you're doing to the forefront, I think it, just my hat's off to you in terms of what you're doing. And this is the start, as you say, it's not just, we've had that period over the summer, where we've been talking about, George Floyd's, tragic death. That unfortunately, has raised it, but it's the start of the, really kind of bringing this message across, growing the network, talking about being anti-racist and so on. So, fantastic, in terms of what you're doing there. And, hopefully we'll see, more of that, as I say, like in London and these other cities, across the world. Storm Ventures is in the US, but also,
Yep.
Investing in European companies. Have invested in a few TalkDesk, Algolia, I think.
Yep. And recently, Solaris Bank, a fintech sort of play that's based out of Germany. So yeah, we're continuing and always looking.
Yeah, so I remember that. And you guys invest in startups with the early stage, but those that they've already got PMF really, and they're looking to get to go-to-market fit. So let's talk a little bit about that. Why do you invest in that stage? I guess people have got to have their sort of niches. What is go-to-market fit? What are you looking for? Why go-to-market fit?
Yeah. So look, Storm, we've been investing in B2B companies for over 20 years, right? And what we have learned over the years is that, one of the unique challenges for a B2B company that is distinct, right, for all B2B companies is that you've got to figure out how to scalably and efficiently sell to your customers, right? Unfortunately, in the enterprise, in the B2B world, having the best product isn't enough. Right. And there's plenty of examples. And, if you look over the history of B2B software where the best product didn't necessarily win. Right. It's sort of this beautiful interplay between having a great product and a great go-to-market that works for the target customer set. And so, we have done, and one of my general partners, Theuma, one of the founders of Storm, has written 2 books about go-to-market fit and called Survival to Thrival. And our focus is really saying, hey, look, let's acknowledge that this is a challenge that's unique. And if we acknowledge that, let's then put in the resources and support systems to help support navigating through that. And ultimately, once you have found this go-to-market fit, we have seen for us, our companies, find raising the next rounds of financing significantly easier, and their ability to have a successful outcome for all investors and stakeholders and founders and employees generally goes up significantly. And so, we felt like over the last, 21 years that Storm's been actively investing, there hadn't been as much focus on that unique challenge that we just realized was consistent. And a lot of folks have focused on product market fit, right? And that makes a lot of sense. In the early days, you need to nail that. But look, when you really want to scale a business, you've got to nail that go-to-market piece. And so for us as experts that focus on building scalable sales and marketing and customer success teams and organizations, we felt like we could do a lot more by focusing our firm there and supporting them. And so, we've done that with companies in Europe. We've done that with companies in the United States. Obviously, we support that across the board. And that will continue to be an area where we like to sort of roll up our sleeves and focus in. And so I'm excited to continue to dig into that because I feel like, there's a lot we could talk about over go-to-market fit. And so let's dive into it a little bit, maybe.
Yeah, no, for sure. Well, I guess the question, what are the signs that you found go-to-market fit?
Yeah. So the way we like to think about it here at Storm is, you're seeing, really good efficiencies in the unit economics in your go-to-market. Ultimately, you've got a good, solid magic number. But, for us, really what we're often looking for is, have you hit 1 million of net new ARR per quarter? This is a really unique sort of point in time where things are usually moving very effectively, and you're starting to be able to get into a net new ARR attribution to the underlying business that gets very interesting to later stage investors. But ultimately, what we're also looking for is how efficiently are you doing that when you're adding? So we spend time looking at growth efficiency as well, right? So how much cash are you burning to generate that net new ARR? And for us, we like to keep that around, ideally for every dollar you're putting in, you're generating more than $1. But the reality is in startup land, that's not likely to be the case, right? You're investing in artificially much more into your sales and engineering functions than you might at scale, right? And so for us, we're often looking for businesses that are in and around $1, 1-to-1, right? For every dollar going in to sales and marketing efforts, you're getting $1 out. And so, that tends to be what we're trying to drive a business towards. And when we're investing, we're not seeing that usually, right? And so what we're doing is then putting in place sort of reporting and accountability measures to understand what's coming out, how efficient is our go-to-market efforts, how big is that pipeline, what's happening as things are moving through, and ultimately getting you to that point where you're generating 1 million of net new ARR per quarter.
How do you find these companies that are generating, as I say, 1 million net new ARR per quarter, without giving away your secrets, so everybody starts looking there? But how do you come across these private companies and with these metrics?
Yeah, Alex, I mean, this is the challenge, right, of every VC firm, right? Is how do you do sourcing well, and how do you do sourcing well at scale? We have, a variety, of benefits to our model and how we work. First of all, we've got over 20 years of, portfolio founders and network ties that help support and drive top of the funnel for us, right? And we try to sustain and build and drive that networking community, right? Whether those are events for that community or opportunities for them to become mentors and advisors to the next generation of portfolio founders coming up through our ecosystem. So that's certainly a big way that we source. But then we build partnerships with groups like SaaStock, right? We built partnerships with early stage seed funds across the United States and globally as well, so that they understand what we're looking for. And those are natural partnerships, right? Because those earlier stage funds are focused on the product market fit side, but their area of expertise often sort of starts to wane as they move into that next phase of finding go-to-market fit. And so that's where we often start to come in and help support them. And then, look, the last way we generate and find great deals is just by being very, very clear about what we're looking for, right? Those are B2B companies. We're focused. We're not doing consumer deals. We're looking for companies that have, customers and have revenue coming in that helps sort of cut out a decent size of the market. And then, at the end of the day, we're also just spending a lot of time with founders that are too early than where we invest. And we have a a core model of trying to provide value to those founders earlier so that they have a little bit of an anticipation. They know what's coming around the bend, right? In terms of how that next stage investor is going to evaluate them. And we can help them sort of tell that story appropriately, but also just start to measure the right things in their business to make sure those underlying unit economics start to look right as they come and become ready to raise that Series A.
Yeah, very smart, very smart approach there. And let's talk about some of these, or even just one of those sort of companies that Storm have invested in that have found go-to-market fit. Yeah, just really perhaps how they found go-to-market fit, and then since that point, and since Storm sort of working with them, let's say some of the traction that they've found beyond that point, what you can share.
Yeah, sure. I'd love to share a little bit about an investment we made in Sendoso, because I think it sort of represents, a lot of what you're talking about, right? And how our community, Sendoso, so for those who don't know, is a sending platform. And so if you think about how do you send, gifts or, corporate swag to your network, your community, or in your go-to-market to try to sort of accelerate leads through your pipeline, right? And so a common use case is someone might use it to say, hey, thank you for signing up for a webinar. Here's a cupcake. And they'll get that sent in the mail, and that'll increase then the show rate up to the webinar, which then obviously it becomes on that company to prove with their product and, their salesmanship, that they have a product that fits a given need. And Sendoso, when we first met them, we met them because we had 2 portfolio companies using the product who loved it. And when we have founders in our community sending us a deal saying, hey, look, this is interesting. You have it for multiple sort of individuals and vectors. So you realize across sectors that this is providing unique value. We got really excited. And so we started to lean in. We learned more about what Chris and the team were doing at Sendoso. We decided to invest. It was still, sub $1 million of ARR when we did come and join that journey. And look, they had a product that, originally was all about coffee gift cards originally, for doing little meetings and thank yous, and has evolved into a major platform that provides a lot of value to, hundreds of customers across the United States. And it's just been an incredible journey. And so when we invested, a lot of the focus was around, okay, you've got this crazy, set of leads coming in. Let's make sure we're, servicing those leads efficiently. Let's make sure we understand how we're going to do this, how we're going to scale across this business. And then let's also understand the unit economics of the unique sort of challenges of this business, right? They've got an incredible, successful company and growth, but they also deal with a warehouse and goods and shipping. And that's, can be a nightmare, right? For a team, of equal quality and management. And that team's been able to manage transitions to their business successfully. They've been able to grow and cater. Customers have great, customer happiness, and been able to keep, churn and other metrics to, a good level that we would want to see in a business like them. And so they've certainly, found their go-to-market fit. They've certainly, gone past the point that we would be looking for to establish that. And they're in this phase of their growth where they're bringing on growth capital to continue to cater and delight customers at scale as they close bigger and bigger deals and work with larger and larger corporations.
You mentioned Storm have recently invested in Solaris Bank, right? And out of interest, how many investments has Storm made this year?
Yeah, so we've made, I believe, about 4 investments year to date, maybe 5, but I believe it's 4. And 3 of those have been post-COVID, right? So during this era where we have not been able to physically meet companies and founders in person, which certainly created a unique dynamic change. But, for us, the reality is, we've got to find ways to adapt and continue to be able to cater to our customers here, which are startup founders, ultimately, in the same way that every company in our portfolio has had to pivot and cater to their customers in a different way as well.
Did you ever think, had Storm ever thought before COVID that you would invest in founders without meeting them?
No, absolutely not. I mean, I don't think we thought we would do it in the way in which we're doing it, at the scale we're doing. It's funny though, prior to COVID, we'd done it once before. And so we'd invested in a company in Atlanta where we had strong network ties that had, that knew those founders. And, we ultimately believed that we could make a decision without it. But I think what's changed is our willingness to make that decision across, check sizes, right? We might've been more cautious to go too big of an early check in a team we hadn't met prior to COVID. But I think, we've had to just operate and transition and think through what does this mean to our workflow. And I'd say the biggest change for us is we probably just spent a little bit more time doing personal and professional references on the founders, right? Because we don't have that ability to be in person and just, see and build a relationship in the same way that you can. Because while Zoom and video lets you get 90% there's a 10% that's materially not there in terms of building that rapport and that relationship as you're doing diligence.
How when you're doing due diligence in person with somebody that you're going to invest in, a founder you're going to invest in, are you going out for dinner and drinks and trying to get to know them? Are you dating for a period?
Absolutely. Look, this is a relationship that's going to last for, possibly a decade or longer, right? In terms of the working relationship, and hopefully will be a professional relationship that will last, for, perpetuity to some extent, right? And so you definitely want to build the relationship because you want to know how to work together, right? How to be able to support one another, and for us, support the team and the other founders and executives that are likely already and will likely be joining soon, right? And so, it's a tough sort of plunge you've got to take. We get into marriage. This is a marriage. People say this all the time with venture, and it's true, right? Once you bring a VC on that cap table, they're with you for the, until that cap table, becomes something very different, right? Or sort of disappears altogether for hopefully a really great reason, as it's structured today. And so, we try to spend as much time as we can to de-risk the investment so that founders get to go and understand who we are, but also that we understand who they are, and what their goals are, both professionally and personally, and make sure that, our relationship that we're going to be going on together can achieve those long-term for both groups.
We know that you invested in the US, or some invest in the US and Europe. With everybody being online sort of right now, if an interesting SaaS B2B SaaS company from Brazil, or let's say from Singapore or Australia, contacts you and they've got the right metrics, is this something that you previously may have passed on because it wasn't the right geography, but now you would consider?
So for us, there's no difference. We would consider you no matter what. I think the only metric we tend to have is we want to make sure that they have a desire to go to market in the United States as well, right? Because a lot of what we do is really focused on building that US go to market versus an international one. Though we have no qualms with someone having and growing and investing in a domestic or a regional go to market that may not be the United States, but ultimately it can be difficult for us to invest and deploy if we don't believe there's a strong market opportunity in the United States as well to sort of execute against. I think for companies, that are, have positive unit economics, are growing, tripling, year over year. I think that what they'll find is a broader willingness for all venture investors to invest, or at least look at the deal in a way that, it may have been harder to, because again, the requirement that you're meeting in person no longer exists, right? And so I hope that we'll see this as an opportunity as we reflect back in, 2 years or so, and we'll see this as a inflection point where investment starts to, more equitably go across the United States, but also globally. And I think we're seeing early signs that that's likely going to happen. I'm talking to investors all the time that are meeting with founders all over the place. I mean, today already I've met with founders in 6 different time zones, and distributed teams all over the world. And so I think it's an exciting period. I think there are other unique challenges with COVID that some international businesses may have to sort of reflect and manage through. But those are challenges, frankly, everybody is trying to evolve and manage through. And so, I do think this is a great opportunity and timing for international-based companies.
What are your personal kind of biggest lessons learned or sort of takeaways over the last sort of few months that you'd be happy to share, apart from how wedding?
Yeah, so first of all, look, I think no one can predict anything right now, right? I think we're living through a time where, anyone who's telling you they know what the next 3 months or 6 months is going to have is quite frankly, just wrong. I think we are all trying to figure it out. I think there's a lot happening and it's complicated, right? And so, what that translates to then as an investor, then I'm focused on, cash is still king, right? So at the end of the day, like maintaining runway is important for any and every business. Investing though right now in, driving that top line is also important, right? I think at the onset, there was a lot of sort of, let's pause that investment in sort of that go to market. Let's see and wait and make sure we just have enough runway and not increase that burn. But the reality is SaaS, particularly B2B, SaaS has been, doing quite well during this period still. And I think there's this question in everyone's head is COVID creating a perfect environment that's accelerating the digital transformation of the enterprise? And I think the answer is yes, it is. That being said, how long will that acceleration sort of persist for? And what does that mean? And will this cohort of customers perform like previous cohorts? Or will we see churn in a way impacting this cohort differently, right? And I think those are the kinds of questions we need to be thinking about as we start to think about scaling and building out systems that are tougher to unwind in go-to-market activities. And so that's something we're talking to all of our portfolio companies and founders about. And I urge every founder out there to be reflecting and thinking about. But look, I think this is an interesting period we're operating within, and we're going to have a lot of lessons learned. But I think, the other piece that we're making sure every founder hears is like, this is a period where we've got to move fast. Being slow in making decisions could hurt that business in any way. And so as we start to see any potential slowdowns impacting businesses, we've got to be willing to move quickly. And the good news here is every founder, at least in our portfolio, and I think in a lot of portfolios out there, now have the muscle memory. They've gone through this work 3 months ago to do the planning and everything. And so the good news is we should just keep those plans active and operational so that we have a plan that we can sort of fall back to should the world start to change and look different.
Amazing. Your like final question here, Frederik, just conscious of time. You work full time at Storm Ventures. You work 20, 30 hours a week, outside of work on Black VC. How do you protect yourself from burnout? How do you stay healthy and sane, whilst doing your two jobs, I guess?
Yeah, I mean, look, I'd say it's something I constantly struggle with, right? I'm constantly asking myself, how do I ensure I don't burn out? How do I make sure that I'm taking care of myself, right? I'm eating well, exercising, trying to live a balanced life to some extent. And I'd be the first to say, I don't think I've lived a balanced or healthy life over the last 3 months. I think that's probably true for a lot of founders out there, but even probably more true for a lot of, Black Americans and Black persons across the world right now. And so the reality is, it's been difficult. I think, for me, I'm lucky that I have a great support system, whether those are my partners at Storm, whether that's, the colleagues and the folks that, I work with every day at Black VC that help make Black VC come together and be successful. Or whether that's my wife, right, who's there as a rock to help support me and sharing. And I think, one of the things I've really strived to do is be more transparent, be more willing to share when I'm going through a tough period or struggling. And that's really tough, right? I think, there are these, tropes around, toxic masculinity and how that plays out in all, high achieving individuals. And it's on our job to share, right? It's on our job to reflect and take a moment. And so I've tried to meditate more in the last few months. And I've tried to, spend more time with, coaches and acknowledge that, I can only grow when I reflect on my needs and I take a step back and pause for a moment and then think more. And so, it's hard. And I don't think I've done a great job recently, but look, half the battle is acknowledging when it's out of whack and then getting it back into a sort of equilibrium. And coming up to Seattle, as you mentioned at the onset here, my parents and my twin sister live up here in Seattle. And so that's also been a good sort of recharging of the battery during, we've had here in the US with a long weekend with the Labor Day holiday. And so that certainly has helped as well.
Okay.
Alex, I'll turn the tables on you. How do you do this? How do you get de-stressed?
Yeah, some similar things, but exercise like 5 days a week. That really, I do it before work, and that sets me up for the day. So whatever comes that day, just kind of like you've already got a lot of that kind of stress and tension out through the exercise and kind of feel good and got the blood pumping. I'm really bad at meditating and going through like
hard.
I did 10 minutes this morning, but the last time I did it, I can't remember. It was a few weeks ago. So I'm super inconsistent. I do feel the benefit when I do it, but I want to form that consistency, which I'm pretty poor at. Trying to get a good night's sleep. Again, that's kind of really kind of up and down. And being a founder or just, I guess kind of anyone in these times, it can be challenging. I think, like having a coach and as well has kind of like really helped over the last 6 months. So just putting in, I guess, a bit more kind of discipline and routine, peak performance into my structure. And even I've got a Google sheet where it's like I've got like certain habits and I'm ticking off kind of each day, you know, have I done that? You know, have I switched off my, you know, digital screens at 9:30 to help me, you know, sleep better? But usually it's not, because I'm watching Netflix or whatever, right? So yeah, I'm definitely trying much better than I was, and taking much better care of myself, because it's hard running a business, right? And certainly during COVID or any time, right?
Yeah, absolutely. It is hard. And I think, you know, I'm glad you asked the question, because I think we all need to be thinking about it. And I think this is a time where we've got to be thinking about it more than ever. And I think as any individuals, you know, whether you're founders or board members, you know, it's our job right now to be, I think, more empathetic towards this question for our companies and our employees and constituents. I mean, they're going through a hard time being, you know, in social isolation in many instances, having children going back to school, but you know, effectively now being an employee and a teacher. It's, you know, we've got to be thoughtful of how do we de-stress and how do we balance things out a little bit more, and come together as a community ultimately, whether that's here in SaaS or whether that's a community regionally or locally. I think we've all got to learn and come together and learn from one another best practices that are working.
Yeah, 100%, 100%. Well, Frederik, it's been a pleasure speaking to you as always. Thank you so much for sharing with the SaaStock community, and we're looking forward to seeing you speak at SaaStock EMEA in October. So Frederik Groce, Principal at Storm Ventures and co-founder at BLCK VC, thank you for being a guest on the SaaS Revolution Show.
Alex, thanks so much for having me. And if you're looking to learn more about me, you can follow me on Twitter. I'm at Frederik, FREDERIKG 191. Or you can follow and find me at stormventures.com.